AAT Introduction to Bookkeeping Practice Assessment Walkthrough. So this is the AAT Practice Assessment for Introduction to Bookkeeping. I'm going to show you the questions. You can pause and answer the questions, and then I'll give you the answers. We'll do each, question 1, question, and then I'll do the answer to question 1, question 2, and then the answer to question 2. So we're going along. So in task 1, then you've got a sort of source document, statements of accounts question at the start. A. Then in B, you've got a coding question, and then D and E is a digital bookkeeping question. Okay, so you've had a chance to pause and answer, so I'll take you through the answers to this. So identify which of the following will be used for the purpose below. So identifying transactions that have been received into or paid out of the bank account. So that's a bank statement, which is a statement of account for the bank account. So a bank statement for question 1. Summarising transactions with a supplier, so summarising transactions with a supplier, and advising them of the amounts to be paid to them. So the amounts that we're going to remit to them. So that's a payments of remittance, and there's a remittance advice. So this is the customer saying, I've paid this amount, and it's made up of these invoices and these credit notes. If it was the other way around, and it was the supplier saying, you owe us this money, and it's made up of these invoices and credit notes, and that would be the supplier statement. But in this instance, it's the remittance advice. Detailing the goods supplied to credit customers and the amounts to be paid. So it's detailing the amounts, the goods supplied and the amount to be paid. So that's an invoice. If it was the seller producing, from that point of view, the seller produces it, and it's a sales invoice for the seller. Now they provide that to the purchaser. So they provide that sales invoice for the purchaser, and for the purchaser, it's a purchase invoice. So for this point of view here, it's just that it's an invoice. Authorizing. So authorizing, so this is like a manager saying, pay this. And they're authorizing low-value purchases paid for in cash. So that's going to be a petty cash voucher. The manager authorizes a particular staff member, let's say, to have made these purchases or what have you, and gets a bit of money out from the petty cash tin to pay for them. Saves it going through the payroll system. Okay, that's 1A. Right, accounts are to be opened for 2 new customers. The customer account codes follow the format below. The first 4 letters of the customer name, so an alpha, and a digital 3-digit sequential number. So a sequential number is one after the other after the other. So 1, 2, 3, 4, 5, 6, what have you. So that's sort of sequential numbering in there. So what we do with sequential numbering means that we don't have gaps in our numbering systems really in there. It represents the number of customer accounts. Okay, so as an alpha numeric code, this one in here. The last customer account shown is straight below. Okay, so the next one will be 79, and it's the first 4 letters. So it'll be Ched, and then 79, and core, and then 80. And the reason why we need the number on here is, let's say we had Clen Tok here, and we also had Clentic. Then we'd have to 2 different. They still come as Clens, so we couldn't use just the 4 letters. We need the number afterwards. So that's that. Next part of the coding question. Each page of the general ledger is numbered, starting from 0001. So this is general ledger accounts in here. They've all got their T accounts sitting on a page. The page number is also the general ledger account code. Okay. Identify the coding system there. So it's not a letter because there's no letters in here. There's no, so it can't be alphabetical and it can't be alphanumerical. So it's numerical. This one. So that one is numerical. If there was, like, let's say, sales 001 and then sales 002, because there was two different, let's say, products and whatever, and that would be an alphanumerical thing in here. But in this instance, there's just one sales account. D. Identify the following statements regarding digital bookkeeping systems. So we've got digital bookkeeping systems. So instead of a manual system where we're writing out by hand, we've got a digital bookkeeping system, and it's true or false. It is possible to import data relating to bank transactions in order to complete the bank reconciliation process, and that is a key advantage. That one's true, because what we can do then is when we load up our bank account, and let's say it's Barclays or whatever in there, as a company, they will give you the facility to be able to download what's in that bank statement there. You download it into an Excel CSV file, something like that in Excel. You'd then be able to sort of put all the various different codes next to it, and you'd probably be able to upload it into your software system, and it posts all the journals for you. And so that is a big advantage, and that's how most people do. Most reasonable sized companies sort of do their bank amounts. Really, they'll either sort of tick off that we've already put those ones through, and or they'll be on the bits that are missing. certainly be using it to download and do the bank reconciliation in there rather than sort of writing it out by hand. It is not possible to post a transaction to the wrong general ledger account. Well, of course it is possible to post a transaction to the wrong general ledger account. We can just make a mistake, so that one's false. You can always still make errors in the bookkeeping system. It's possible to make less errors. That's the potential. Okay then, so a purchase invoice from a credit supplier has been, let me just check that was available to you. Yep. So a purchase invoice from a credit supplier has been entered into the digital bookkeeping system twice. So the easiest way to sort of see this is to actually write out what's happened. So we've gone credit purchase ledger control account, credit once, credit purchase ledger control account twice. So we've done that twice, and we've gone debit purchases twice. Here, so we could pay twice in here, and we'd have twice the amount of expenses. Let's see what the cost of purchases will be understated. Well, no, we've got twice the amount of purchases, so it's definitely not that one. The total amount of goods owed by receivables will be overstated. Well, you're not seeing the sales ledger control account in here, so that's not true either. The business may pay for goods that are not received. Yes, because it's only received one lot of these goods, but it's put two lots in there. So when it does its sort of sales, does its remittance advice and pays for the goods, could pay twice. So that's the answer. Could pay twice. Business may be paid for goods that have not been sold, but we're not making any sales here, so there's nothing to do with that. So that's the answer to question 1. Right, question 2. So this task about the principles of management bookkeeping. At the end of February, we've got the following assets. We've got a list of assets and liabilities in here, and we've got to produce what's the assets, the liabilities, and the capital. So that one go through, and then B. The first transaction recorded in March is taken to be from the till. Right, so opening balance sheet question, and then C. Saying what each of these transactions are going to do. So this is a debits and credits question within a journal production. So hopefully you'll be able to have a go at those. Now I'll take you through the answer. So I really like this question really because this one really sort of highlights how the money in, money out method of double entry bookkeeping, how it properly is so much more superior to like dead click, because somebody who's doing dead click here would go, all right, okay then, assets, so that's the assets there, they'll go through there though, and then of course they completely forget that the money in needs to be the same as the money out, but then do the accounting equation, and assets equals liabilities plus capital. So they've missed the whole of the capital off. So here we're going through here. So that is an asset, because it's a money in item. It's either money in now or can be converted into money in the future. We can simply sell the computer equipment. So that's money in item there. Asset, money in already. Asset, receivables, money that we're going to get in the future. Asset, money that we're going to pay out. So a liability from there. So money out in the future to non-shareholders. Liability. Money already out to non-shareholders in the future. Liability. Money in the future, because we could sell the fixtures and fittings if we want to, or we're going to use them to make profits. Asset. So there's our assets here, total in that one, 36,938, that's what we're going to here. Our liabilities are these two items here, 6,851. And of course the key thing is that our assets needs to be equal to our liabilities plus capital. So the capital amount makes up that balance of that equation here. And here we've got our money in, our positive money, and these two we have our negative money here. So that's how that one works. That our money in has to equal our money out, and that's how that equation works. That's why I prefer that one. I think people who learn with dead clicks always struggle with that question. The first transaction recorded in March is taken from the cash till by the owner. So the owner's is cash taken from the till by the owner to purchase a new computer for the business. So what's going on here then? We've got credit cash, because our cash, which is our money in item and asset, is going down. So that's a credit. A reduction in the money in item is a negative money point. In other words, that's a credit, the cash item, credit, asset. And we're buying a computer, so we've got an increase in the money in item in there. So an increase in the money in item is a debit. So we've got a credit, asset, debit, asset. So decrease in both assets and capital. Nope, it's not that. Decrease in assets and increase in liabilities. No, it's not that. And this is where dead click would always yeah, of course you have both sides going up. So that's no, that wouldn't be that. Both an increase and a decrease in assets, which is that one. So it's C in this one. The increase and decrease in assets. We've got credit, reduction in the asset, which is cash, and an increase in the asset, which is computers. Okay, identify the opposite effect of each bank transaction. So we've got whatever the thing is, credit or debit, bank, and what is the other side, and ignore that. So we paid for, so we've gone credit bank could be paid for the bank. So credit bank, debit expenses, so debit expenses, we've got increased expenditure, so increased expenses. Transferred surplus money to a bank savings account. So we've gone credit the bank, and then we've gone increase, and this will be the bank one. There's going to be an increase in assets as well. So we've got an increase of bank savings one, that's an asset, so that's an increase in the assets. We've repaid the loan, so we've gone credit the bank, and we've gone debit the loan account, so a reduction of the liability, so a decrease in the liabilities there. Okay. Received a check from a credit customer, so we've gone debit the bank, because the bank, we've got that in the bank, so our bank has gone up. So debit the bank, and then the other side is going to be reduce the sales ledger control account, so that's going to be a reduction in that assets, so decrease of assets there. Received a check for cash sales, so instead of this one being a reduction in the amount that was already owed in here, where previously the transaction would have been credit sales, debit sales ledger control account, then it would have been debit the bank, credit sales ledger control account. Here we've just gone straight up debit the bank, and then we're going to go credit sales, so it's going to be an increase in income. Yeah. And then received a refund from a cash supplier for an amount overpaid for computer repairs. So we've gone debit the bank, and then we're going to have credit our expenses here. So it's going to be a reduction in expenditure because we're reducing that expenditure line for computer repairs, credit computer repairs account. That's the answer 2. So question 3 is about creating a process, or processing a sales invoice, the first bit. So pause and have a go at that. And then down into B here, which is about which daybook it's going to go into and completing the amounts in the daybook. Okay, so hopefully you pause in there, and now I'll go through the answers. So in terms of this task, it's about processing a customer invoice or credit invoices and put them in the daybook. So sales invoice number 3577 has been prepared from the quotation below. And identify which type of discount the customer has been offered. So we've got 3 types of discounts, which is bulk discount, the amount that is bought, prompt payment discount when it's paid, and trade discount, who you are here. So here there's the terms here: 3% discount if paid within a certain amount of time. So it's when it's paid, it's prompt payment for that one. Then we're going to put is calculate the amounts to be included within the invoice. And I've sort of seen a little bit of a note here saying it's a touch of a shady sort of thing in here, because it's got net amount after discount really, and really it should have been either net amount or net amount after applicable discounts really, because the bulk and the trade discounts would be deducted from the net amount, including the sales invoice, but the prompt payment would only be deducted when it's paid really, so it wouldn't be deducted from the net here. It'd be included or deducted, calculated and sort of deducted from the sales ledger account and the sales ledger control account when it was actually taken advantage of here. So this net amount here is actually simply just going to be the 3,000 times by the £1.80, 5,400. The VAT is going to be 20% of the net amount, and the gross then is going to be 6,480. So that's the answer for that one there. And just be aware that prompt payment discounts are not deducted from the net amount in the invoice. Okay, that's going to be enter the invoice into the digital system by selecting the proper one. So this is a sales invoice, so we're going to the sales daybook. So that's the one that we're on. So we're the seller, so it's going to go into the sales daybook. And then what we're going to enter into here. So I've got the various bits of information in here. So the customer code goes into here, GRA001 in here. This invoice numbers 3577 in here. The net amount is 5,400 and the VAT is 20%. And then this one here, what is the general ledger code in here? And you can see that it's got the product code in there. The product code in here, which is about whatever particular product that's been done in here. Well, this is the general ledger code here, which is sales office stationery, so 1779. So But what an amazing coincidence that that one there, the product 4380 is the same as the purchase of inventory. So that's a really a bit of a jokey question on that one, really. It's sales in this. We're going credit sales, debit sales ledger control account in this one here. So it'll be that one. So 1779 for office stationery, because we're selling really large files. If it was a big lump of a piece of equipment or something, a desk or a table or whatever, it would have been office equipment. Okay, so that's the answer to 3. Question 4. So question 4 is about remittance advices. So our customer, we're the seller. Our customers' JTP products have make some payments to us, and they sent us 2 remittance advices here. We have our sales ledger account for them. So this is in the sales ledger for JTP products. So yeah, this is what we're saying was their balance brought forward, and then all of their invoices. We've got a credit note in here to watch. Okay. So you're going to sort of line them up, see what the position is there, and then we've got a prompt payment discount in here, and what should have been paid, and what is the actual amount, what should have been paid, what's actually been paid, and therefore what's the amount outstanding. So it goes here, so you can have a go at that one. And also I'll put this down here so you can pause and do that one. Okay, and now I'll go through the answers. So in here, we're just going to line up. We've seen a credit note here, and it's for 3922. This invoice up here, 3922. So you add those 2 together, because the credit. Oh, sorry, take the credit note off that one. So you do add them together, but that's a negative figure. So together they are the 961378. So they've been paid in full. This one, invoice 3922, and that credit note that was attached to invoice 3922. So they've been allocated in full amount, and they are on remittance advice 1010. Then in terms of the balance brought forward, that's this one here, 2976, and that's been paid off in full as well on remittance advice 1067. And then we've got this other invoice here which has been paid in full as well, 1035. Then we've got the 2 which I've highlighted in red here. This amount here, which is sort of saying they actually ordered 35522 and they paid 37522, so they got a transposition error in their accounts really here. So query overpayment. In reality, we probably just let them pay it. And then we got this one here, 39261 and 39621. So we've got another transposition error here where the 2 and the 6 are the wrong way around really here. And so that's query underpayment there. In reality, we're 14 quid up, so we might leave that. Right. Question B, then complete the table below. So in terms of what the amount is, the amount that should have been paid, we've got a 2.5% prompt payment discount here that we'd be deducting from the full amount in here, that amount. So we say should have paid 9629 and £10. They didn't. They paid a lower figure, 9579.72. So they still owe us £49.38. And this one here was 98%, because of a 2% payment discount, 98% of the 2190, which is 2146.20, and they paid, that's what they owe us, £65.70. So that's the answer for B. Question 5 is about processing supplier invoices or credit notes, so supplier invoices in credit notes and day books. So we're now into sort of purchase day books for purchase invoices. So we're going to complete those amounts. Then we're going to be into credit notes here. So we're going to have discrepancies in the credit notes. Okay, so that's those questions. Well, here's the first bit. Pause there and let you pause it and have a go. And then here's the second bit. Pause there and you can have a go. And now we'll do the answers. So first of all, then, so it's about a supplier invoice has been received. So the supplier sends their sales invoice to the supplier, to the seller. It's a purchase invoice to us. So it's a purchase invoice, so it goes into the purchase day book. So that will be the first thing. So sales invoice for the seller. We are the buyer, so it's a purchase invoice for us. And in terms of what we're going to have, then we've got our invoice number here, 18384. We've got a total amount. The total amount here, which is this figure here, 2342.82 pence. the VAT figure there and the net figure there. So alright, so we put those all in, and then we've totaled them up. Total the amounts in here. Now what you see is, this is one way you'll sort of see how I do it as well in this terms of, this is what check your work means. Check your work does not mean do the exam twice. Check your work means sort of, here we go, here's the gross here, then I've calculated the net, or the VAT and the net separately. So I've calculated the VAT and the net separately, then I've added those two together again and checked that those two added together equals the gross, so I haven't made an error in it. That's what checking your work means in an exam really here. You've got two options, or two methods of calculating this figure here. One in the total of all this total here, then we got total this one and total this one, add them together, do the total of those two together equal that one. That's checking your work. Whenever you have the opportunity to do that in an exam, you should always do it. Your time's not going to be a factor in this exam. So the goods return note and the goods return note. So what we have here is a good return note. So what's happened is that we've sent some goods back, and we've sent, with attached to these goods that we sent back, a good returns note here. This is what we've done. Then the seller has produced a credit note. So the seller produces a credit note and sends us a credit note in here. We're now going to check that credit note to the goods returns note to make sure that whatever they've sort of credited us is the same as what we've returned. So what we can do here is identify two discrepancies in the credit note. The first one is, well, 9 boxes of 8 items. That's what we sent back. Here we sent back 72 items, and they said that we sent back 90 items. Now we've said £24.80 per box. £24.80 per box of 8 is £3.10. So there's not a discrepancy there. That's right. In terms of that, and we've got the same product type, C4736, 3436. So there's no discrepancy there, but there is a discrepancy on the date. And what they've probably done is they've probably dropped back and put the credit note at the same date as the sales invoice, I would imagine, and they would have done that for VAT purposes. Yeah, but that's the way there's a discrepancy between on the credit note, on the date, and on the quantity of items. And so that's question 5. So question 6, and question 6 about processing payments to suppliers. So this is the first thing here. So you're going to work out what's going to be paid and when to pay it. Yeah, read the question. You're going to take advantage of prompt payment discounts. Alright, that's the first bit. I'll pause there and you can have a go at that. And then B, we've got a statement of account from the supplier. So the supplier is saying what we owe them. And we've also got our supplier report, what we think in our purchase ledger, what we think we owe them in here. So we're going to then work out what we've already actually paid, what we've paid to them. We've got this sort of check at the end, we can sort of see what we've been paying, and then calculate the amount that should be paid to settle the remaining balance of the account. So that's what we've got. So I'll pause there. We've got that, and now I'll do the answers. So the first thing we've got is we're going through it's a company policy. So it's processing of payments to suppliers. It's company policy to always take advantage of prompt payment discounts offered. So they're always going to take advantage, and they're going to pay as late as possible, but not late in here. So they're going to take advantage of it. So we've got our terms here. So Kings Limited is saying 5% within 10 days. Trinity is saying net monthly. So what that is it's the end of the month after the invoice, and 4% discount for payment within 7 days. So Kings Limited, 10 days, add another 10, that's going to be 20th of May. Trinity is net monthly, which is the end of the next month, so end of this month, 31st of May, end of next month, 30th of June. And then 16th of May, add on 7 days, so that's going to be 23rd of May. Okay. So this is a statement of account from the supplier. So we're the buyer, we're the purchaser, they're the seller. We've got our supplier statement, they're telling us what we owe them really. And we've got our supplier report from the purchase ledger here. And so what we're going to do, first of all, we can see this check here. Now what you have to do is you have to sort of, by a process of trial and error, work out what this payment was. Now, so we've got to identify the 3 transactions from the supplier statement account that have already been paid. So we're almost doing a sort of a process of elimination, but there is a bit of a help here. If you see a credit note, it's pretty much going to be in there somewhere, and we've got the opening balance that we've taken off. So what I've done is I've got this 3012 here. I've taken off the opening balance, and I got down to what was it? The opening balance was equals 3102, and I took off the opening balance of 982. That led 2120, and then I added on the credit note. Yeah, so I took that and I added on the credit note. Okay. So the reason why I added on the credit note is because the credit note is going to be taken off one of these invoices, and it would be a bit strange to sort of set the question with a credit note in there and not include it in the answer somewhere. So that's how I got to 2416, and 2416 happens to be that one. So it's that one, the opening balance, that invoice, and that credit note. The reason why I thought it was going to be those ones in there, in the trial and error kind of approach in there, is because that will make it for the most interesting question, and pretty much it always does. So there's a bit of a tip there. If it doesn't, then you just got to go through on the trial and error on that one and crack on with it. And then what is the rest of it? What is the balance to settle? Well, we've got all of these other ones to just add up. Really, we haven't, and then we just add them all up, and that's the amount that the balance to settle is 19,270. So that is question 6. Question 7. So question 7 is about transactions in the cash book here. So we've got two transactions in here, and then we've got this debit side of the cash book. So we're going to enter the transactions and complete the debit side of the cash book by entering. So complete the debit side of the cash book. So you're going to enter the amounts in there and then start completing away the rest of it. And then the credit side of the cash book shows total payments of £12,664, and calculate the bank balance, and then basically you'll carry down your bank balance and then bring it down to see what the bank balance is. Okay, so I'll pause there for a second. You have a go at it, and now move on to the answer. So, let's go back here to the left. And so, in terms of our amounts there, though, we've got, now the first thing I would say is that this is two sides of a bank, of a cash book here. There's the debit side, so debit bank, debit cash on there, and then credit all of the other general ledger accounts. And then there's a credit side to this bank cash book as well. And so in the exams, it always seems to tend to show you just one side of the cash book. That's not really how it looks in reality. In reality, the cash book has both sides of the cash book there, the debit side and the credit side in it. So this is just the way that the exams are set out. So we've got the debit side in here, which is going to be debit cash and debit bank, and then credit all of these other accounts here. So Ben Silvers is a credit customer. So he's a credit customer. So we've already previously gone credit sales, debit the sales ledger control account here. So that amount including the VAT. So we've gone credit sales, credit VAT, debit the sales ledger control account. So here we're just going to go debit this credit customer, so it's paying into that bank account. Debit bank, credit sales ledger control account, which is trade receivables, so credit trade receivables. And then EPD, which is a cash customer, so they haven't hit already the sales ledger control account, the trade receivables account. So we're going to go credit cash because they paid cash to us, they've given us cash in our till. We're going to go credit sales 189. We're going to add on the VAT, credit VAT, which is going to be so credit VAT £37.80, and then the total amount of cash that we received was £226.80. So 226.80 there, £37.80 in the VAT, and then the cash sales 189 here for this cash sale here. The bank one was debit bank for 74 and credit trade receivables for 74. Then we total that up. So the total that is 126304, and the total of the bank is £20,356.16. So that's the first bit for that. Then in terms of our bank account, we've got debit £20,356.16. We've got credit 12,674, so that would be slightly. No, you can't. I've done this in accounting convention really here. I've done counting convention there, but I'll now show you next to it what it would look like in a T account. There's the debit side. Here's the credit side. This will be the carried down figure. Add them both together. Add them both together to make sure that they balance. Let's just get this to be a bit bigger as well. Okay, so then we know that they balance. Therefore, brought down figure is that, and that's the balance there. So it's 7692 and 5 is the balance. And that's question 7. So question 8 is about the petty cash book. So we've got an opening bit here. I'll pause there and you can pause it and have a go. And then in terms of the second part of the question, in here, I'm going to create an amount that's going to be done to be able to build up the or how much should be transferred from the bank at the end of it. So I'll pause there and you can have a go at that one. Okay, now for the answer. So the first parts of this are a VAT question really. So we've got this amount here, this payment here, £32.64 here, which is including VAT that's paid for travel expenses. So we've got to divide that by 1.2 to get the net amount. Here, £27.20, and then the difference between the net and the gross is £5.44. That's one way of doing it. Second way of doing it is to divide this amount by 6 to get the VAT amount, £5.44, and then divide it by 6 and times by 5 to get the net amount. You could do that twice actually, to be fair, and that would allow you to check your thing. Now in this one it says here, I think it says that VAT is recovered, and because VAT is recovered then it's not an expense, and that's why the VAT amount would be in this part here and the net amount would be in there. If the VAT wasn't recoverable, and then it would all go into the net figure. That's not how it is. Anyway, so before the petty cash payment was recorded, travel expenses of £49.55 plus VAT. Yeah, £49.54 plus VAT had been entered into the petty cash book to calculate the total amount of travel expenses. So it's not got the, because we're recovering the VAT in here, so it would be the £27.20 plus the £49.55 in here, and so that one's £76.75. The VAT is recoverable, so it's not an expense. After all the September petty cash payments have been made, an amount of £23.22 was left in the petty cash float. And it was agreed that with total payments, and there's total payments of £226 in here, on the 30th of September, the petty cash imprest amount was restored. So, what does imprest mean? Imprest actually is from the, I think it's from the Italian impresso, which means loan. So it's a loan amount to the petty cash. And so an amount to the petty cash, which is here. So what you do then is you just sort of say, well, right, the amount that was at the end was £23.22. The payments were £226.78. So what we started with at the start of the year was it was £250. So that is the imprest float amount here. So we're going to put into here, it must be credit bank, debit the petty cash cash holdings, debit petty cash, £226.78. So identify the entry required in the cash book to record this transaction. So it will be debit petty cash, credit bank. So bank will be in here in the petty cash sort of side. The amount, £226.78. In the petty cash book side is going to be a debit, it's going to be a credit in the bank account here, the £226.78 to get back up to the £250 in there. So that's the answer to question 8. Question 9. So question 9 is about recurring entries. So we've got a note here to set up then a recurring entry, which is a repeating entry, a repeating journal in our digital bookkeeping system here. And you've got some dates here. Option 1 and option 2's dates are exactly the same dates, so pick whichever ones you want, and then there's the option 3 VAT rates. I'll pause there, you can have a go at that. And then into B, choose the correct ledger code and an effective processing recurring entries. So I'll pause there as well. You can pause the video and have a go at that. And let's go into the answers. So in terms of the answers then, this was about recurring entry. So a recurring entry, we've got an electronic accounting system here. We set the journal up once and it repeats sort of 5, 6 or 7 or however many times you want to have really. And here, I must confess, I don't, as a finance director, I don't really like them in real life because I think that there's a lot of assumption going on here, and things get cancelled like standing orders, and you have to then go and chase your tail around to try and get them. So really, does anybody really use them? No, but we'll crack on for the purposes of the exam. Right, so I have today agreed to rent out, so we're going to sell our rental space to Gordon Glass for a period of 6 months. Gordon's rate for a paid of £390, which includes VAT, so the net figure is lower than the 390. By standing order on the first day of each month, starting on the first of the next month, please set up a recurring entry, a recurring journal. Okay. So the recurring entry in our bookkeeping system is going to be, well, this is where I don't think that's really right. If I'm being honest with you, the examiner's assuming we're going to go debit, bank, credit, our rent received in there, and I don't think so. We're probably going to sales ledger control account really, because we're assuming that they're not going to cancel their standing order. We want to check that there, and we're going to chase our tails through a little bit. So it wouldn't really be done like that. But anyway, let's get on with it. So start date in there. So it's going to be paid in the first of the next month. So the 20th of May now. First of the next month is going to be the 1st of June. That's going to be the answer for the first one, 1st of June. And then in terms of our second one, there's going to go 6 months, isn't it? So June, July, August, September, October, November. So 1st of November is the end date. Frequency monthly, the net amount. So the net amount is, divide that by 390 divided by 1.2, or 390 divided by 5, by 6 times by 5 would be that. And also, remember, check your work. Divide the VAT, divide it by 390 by 6 to give you a VAT amount, add them together to the net, and then does it get back to the gross? And so we check that, so that's going to be 325 in there, and the VAT code is 20%. That's okay. Right. So that's the first bit. And then respond to this. When we put this recurring entry in, the message is always saying you can't use that ledger code. We're not going to let you put a recurring entry into that ledger code. So what we're already seeing here is recurring entries from a point of view of the finance system. It's not really liking them anyway, because it's sort of saying, well, there's only certain ones you're going to allow it for. The finance director typically wouldn't. It's a bit like reversing journals. You don't tend to use them in practice, or you shouldn't, because it messes up management accounts. So the general ledger you selected is not valid for recurring payment or receipt. I would sort of point out as well, recurring entries, reversing journals, and goal seek, the only 3 parts of the syllabus that I don't really agree with in an AAT one as a finance director. But it's rent received, so rental income, so it's that code there. Option 1 would be the rent received, and that's just sort of saying, now I think as well, the general assumption is going to be rent. Oh, right, it must be expenses, especially you dead clickers out there. But rent received in this one in here, because we're going debit, bank, credit, rent. So we've got rent received in there. Right, identify one effect of processing a recurring entry. Entries will be posted to all relevant general ledger accounts. Well, yes, they can. Entries will be posted to the purchase ledger and all relevant entries. Well, in this one, because it's processing the recurring entry, not processing a recurring entry, this one's rent received. So it's going to be to the sales ledger. So it's not going to be that one. Funds will be transferred to Golden Glass's bank account. No, doesn't mean that at all. They might cancel a standing order. And that's almost the problem here with the recurring entry kind of thing here. You're putting into the bank, then you're thinking everything's hunky-dory, and you've got a bank figure. You've got to actually come back in and do the whole bank reconciliation to check that they've got the money in there. So it's a bit of a nonsense, really. Sorry, I should stop moaning. Anyway, that's the end of question 9. So question 10 is about the cash book. So pause there for A, if you have a go at that. And then B has got some purchases, some various day books, and what is the entries in the various ledgers. So pause there, have a go at that. Pause it. And now I'll do the answers. So In terms of the books per range, so it's got the debit side of the cash book here. Remember, there's two sides to the cash book. There's the debit side and the credit side. And the exam always shows just one side of it, even though in real life you'll see the debit side on one page, the credit side on another page in the cash book, or alternately on the same 8-column page with a line in the middle. And there, so, but in this case, so it's the debit side is debit the cash and the bank, because we've got a combined cash book here, a cash and bank cash book. So debit those ones and then credit these ones over here. So show the totals we made in the accounts here. So cash sales is going to be there. Credit the cash sales. So the amount goes in there and it's a credit. And the receivables, which is going to be credit the receivables. We're on debit bank here. Credit receivables. That amount there and that there. And then the VAT is going to as well be debit. Bank in this case, no bank, debit cash in this case here, and credit the VAT. So it's going to be 3 credits there, and the amounts got dropped into there. So that's that part of the cash book. And then sales returns, and all the various day books here have been totaled and amounts transferred to the relevant general ledger accounts. We've already put them to the general ledger accounts. Identify the entries in the receivables and payables ledgers. So the sales ledger, or the trade receivables ledger, and the trades payables ledger. Okay, so not in the general ledger; these are the supplementary ledgers. Okay, so sales is going to be debit, because we're going to increase. So when it comes to the sales, in the sales day book, we've gone credit sales, debit the sales ledger control account, or debit the trade receivables control account, whatever we want to call it. And so we're going to be also as well debiting the sales ledger, or the receivables ledger. So we're going to debit in the receivables ledger, also the same name as the sales ledger. Sales returns, so we're going to go debit sales, credit trade receivables control account in the general ledger. So that's going to be credit the entry in the receivables ledger. So we've got credit the debit sales returns, credit sales ledger control account, or trade receivable control account in the general ledger, but then we've also got in the supplementary ledger credit this supplementary trade receivables ledger. Purchases, when we go debit purchases, credit purchase ledger control account, and so we must be going then credit the payables ledger at the same time. And then discounts received, which we're going to go credit the discounts received, so credit the purchases essentially, and then debit the purchase ledger control account, or the payables ledger. And so we're also going to then be going debit the payables ledger. So remember that what we've got here is you've got our day book going into our general ledger, and that's just going to be though going in as one big figure into the general ledger. We'll have our supplementary ledgers, and those supplementary ledgers are going to break down the big figure in the trade receivables control account and the trades payable control account into the smaller actual accounts that make up those figures supplementary. Okay. No, let's forget about that balancing there. So that's the end of question 10. So last question. Task 11. So we've got a ledger account. So we've got a balanced ledger account in here. In this case, a trade receivables ledger, I think. So balance that down. Give you a second to pause there for you to have a look at that. If you pause it, and then the end of it, which is working out what the balances are in each of these general ledger accounts here. So I'll pause there. You should just pause that and then do the questions. And now I'll move on to the answers. So let's make a start. So what we're going to do here is we've got some data in here, and it doesn't really matter what it's all got in here. That could be a brought down figure or what have you. Anyway, balance brought down, totals in here. So we've got some totals in here. So what we're going to do is this is how it would look here. Let me put this up here. So we've got the carry down figure there, and the totals of these two totals here, and then the brought down figure will be there. So the carry down figure is going to go into here, 5120. Add them both together for the totals in this row here. And the totals for each of those ones are 14909 in either side there, and put the various dates in or whatever. And then the balance brought down is going to be on this side here. And the reason for that is because the debit side is bigger than the credit side, so there's a debit balance in this account. The carried down is put in there, and then you total them together to just make sure they balance. And all that is just a check, in terms of just checking them, rather than just adding up one side or adding up the other and just sort of saying, right, well, what's the figure here? It's a double check really, in terms of you're writing the carry down first once, then you add them up together to make sure that you've got the right figure, and you're definitely confirmed the right figure because that number is that number there, and then you put that as a brought down figure as a balance in the account. So that's, again, sort of checking your work, but that's how it's done in real life, to check people's work so we don't find errors in our accounts when we're adding up. Right, the following three accounts in the general ledger at the close of each day, identify the entries required and the balances carried down, and you put them in as negative if they're, or what are the amounts there on, in particular the debit and the credits. Now, what I've done here is I've done this in accounting convention in here. So what accounting convention is that debits are positive and credits are negative in there. So a minus figure is minus money and there's credit balance in here. That would be what accounting convention would be in an electronic system in here. So I've done it in accounting convention just rather than faff around with the balance and down whatever. So cash figure 448 in the balance on the debit side, and then minus 1233, which makes minus 785. And a minus figure is a credit, so that would be credit 785. You don't put the minus in, but that would be 785 credit. And then this one here is 2728 and minus 683, even 2045. And because it's a positive, it's a debit. And then this one here is 18229 minus 3975, which is positive 14250, but 254, because it's a positive, it's a debit, so 14254 debit in there. And so that's the end of this assessment in here. I think we've got through all the questions in there. Not really. There was only a couple of sort of tricky ones where I think the examiner was a little bit, just trying to make sure you're keeping you on your toes really. As a general, does it work as a test of whether you're now fit to go and become a bookkeeper? Not really, because it's all very bitty. What would be far better in these exams really would be as if they were the day books for one single entity, and there with a whole series of let's say your source documents, day books, and you would produce the ledgers, and you'd actually create a trial balance at the end of it, and that would be more of a test if all of this stuff all fitted together into one single answer, and at the end of it you produced a trial balance. That would be a far better test, and that's what you will tend to have to then go and learn when you go into a company. But hopefully that was helpful. Thanks for listening, and I'll see you on the next one. Bye bye.